There is a question that came in from Prachiti. Is IPO a good investment avenue? As a beginner investing in an IPO, what are the tips you can give me? Now, I know we don't like that word tips because it gets a connotation that we're trying to give you some quick fix solutions, and that's not what we try and do here on the Money Mile. But I get the drift of what you're asking, Prachiti. IPOs, because there is this belief that you apply on listing day, you get some money, a solid gain, and you sell off and a quick money out there. But I think you can get it wrong as well.
Absolutely. So I think what I just read from this query was that she's a beginner in an IPO investment. What I'm not very clear is that whether the beginner is an IPO investment or is a beginner in the investment categories as a strategy which you're looking at. So, but whatever it may be, if I'm looking at IPOs as an investment, I need to understand what they really offer to me. Need to understand the company's qualities which they offered me, the pros and cons in any asset class I look at. An IPO carries that element of risk because that's the first time the company is coming out in public and listing out its stocks, giving out all its documentation. You come to know about the company more when an IPO comes out. So I think it's better if you leave that job to a fund manager. And that's where the speciality of the work lies in. That's his job. That's what he really has to do. That's his endeavor. To understand the stock market, understand the new stock which is coming out in the markets. And instead of you trying to wade out and spread out the prospectus, which I'm not sure how many of us actually read when you go and buy an IPO. So if you leave the job to the specialist, and that's what we always prefer and recommend, I think it's well done because if they like the stock, will buy it through their scheme, through their fund, and will also get a probability of higher allotment, which as a retail investor, first of all, you have a limitation on how much you can put in. At the same time, how much allotment will come to you is also which really matters, because the return which you make on the overall kitty, while in absolute terms it may not sound very large, what you found large is actually your percentage in returns. So if you get maybe a 10,000 rupees allocation, that's what I've been seeing over the last few quarters. Average allocation on a retail category is not more than 10-15,000. So even if it goes up by 10-20%, I'm saying you make a couple of thousand, which is not bad. But then what? What will you do after that? Will you wait for that?
Spend it somewhere.
So you will just blow that money up because that's easy money. So I cannot see any growth of capital in true sense. In a year, you may have a bragging right among your friends, among your family, your peers. I made money in 3, 4, 5 IPOs. But did you make enough to create a portfolio, a value for yourself? I don't think that's the answer. It's not going to happen. Yes, you want to do that, please go. But apparently, I think doing a regular investment is what really holds a mantra.